Hey guys, Dave Keller here with Market Misbehavior. Just wanted to share a couple quick thoughts about the bear market environment we now find ourselves in here. First quote I'll share with you, bull markets are great, but they breed complacency. Bear markets can be energizing. Instead of fretting over the decline in your net worth, think opportunistically about all those bargains and the potential gains when inevitably a bull market returns. That was written by journalist James B. Stewart in the Wall Street Journal 12 years ago in 2008 as the market was selling off and going into bear market territory there. It's funny, during bear market phases or during bull market phases, we have quotes like, don't confuse brains with the bull market. Everyone's a genius in a bull market. Things feel fantastic when the market is going up. And a lot of times we attribute our investment success to skill, right? We are such great investors, we're able to create these great returns. When the market goes down, we start to blame less our own skill and blame more bad luck, right? The market's moving against us. This is just how things are going, etc. I have always found as an investor, I've grown way more as an investor during bear market phases than bull market phases. It's super easy to get complacent when the market's just going up and everything's just kind of working. When the market goes down, it's when you get a great opportunity to reevaluate your process, to see what has been working, what hasn't been working, to think about how you can prepare yourself for the next bear market phase. And to be honest, I've been through a couple of these now, starting in mid-2000s. My initial introduction to investing was during 2001 to 2002 bear market, included 9/11, all sorts of crazy times living in the New York area. And then the 2007 to 2009 bear market phase, then even smaller ones like 2015 and others that were more gentle, but also equally frustrating bear market phases. So I would tell you that the complacency that manifests itself in bull markets evaporates very quickly when things start going down, when people see red in their portfolios. My second quote, though, hopefully will give you some inspiration from Peter Lynch. People who succeed in the stock market also accept periodic losses, setbacks, and unexpected occurrences. Calamitous drops do not scare them out of the game. I spent a lot of time working with institutional investors, and I have found if there's one big difference between institutional investors, money managers managing large portfolios, and individuals managing smaller amounts of money, their own money, one of the big differences is a risk aversion, or maybe more just a way of handling losses. Professional money manager knows that losses are part of the game. They know that bear markets happen. And in a situation like this, where the market's down 20+%, you think of it as, I have an opportunity to buy good companies at a bargain. Where can I look for new opportunities? Where can I sell my losers and get some good opportunities to ride this next leg, which I'm fairly certain is going to happen because it's happened every other time in human history. At all bear markets in history have been followed by a bull market phase. So that's part of it. I found individuals tend, when the market goes down, and if you have individual clients, you will know what I'm talking about. When the market starts going down, your phone's going to ring a lot more because they want to know what to do right now that the market's going down. When the market's going up, things are fine. They don't need your help. But when the market's going down, they start to worry a little bit. So what you have to remind people is that losses are a part of investing, just like gains are. And if you look at the long-term trend in stocks, depending on where you start, the equity markets have provided a consistent 6 to 10% annualized return, again, depending on the window that you look at. There are periods, though, where it's lost a great amount of money, but the reality is it's always mean reverted back to that long-term uptrend. And if history is our guide, we can expect that at some point that will return. So the good news is I found bear markets are a great opportunity to learn, as long as you can stomach the capital loss and use it as an opportunity to reinvent yourself and your process. This sort of thinking about investment process, decision-making, and routines is of interest to you. I hope you'll hit subscribe, hit the little notification bell so you know when I have new videos, and check out some of the other videos on my Market Misbehavior channel. Be safe. Have a great one.